And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
To the Coach's Playbook. I am Jack Pelzer, joined today by senior performance coach and mentor to many, John Hoagland, mustachioed Mick, and Dan. We were just talking about if anyone has any hair solutions, feel free to put them in the comments. Might need them at some point. Anyway, today we're talking about how to create a trading plan, which is an important thing that everyone knows you should probably do, but often we don't. And there may be some reasons for that. But first, Mick, you have a shout out for us.
I've got a few shout outs today. So really happy to share. We have Christian Iwanyan Wu up a little over $10,000 trading the NASDAQ. And then also a shout out to Jung Hoon Kim up $9,500 trading the NASDAQ. Some really big days today. So excited to share those ones.
Those are big numbers. Short the NASDAQ today, can't lose, has been the story so far. So let's talk trading plans. And I'm kind of interested, maybe starting with Hoag today. What steps do you go through to make your trading plan? Or like what is absolutely necessary to include in something like that?
Well, I think the trading plan is, there's a lot of facets to it, right? I mean, you're going to have to make some determinations in your trading, your time frame, your tools, your products that you're trading. All of those things are things that you're going to try and figure out as you or before you really try and put together a solid trading plan. A trading plan can be very similar to a business plan, how you're going to run your business, important numbers, important contact numbers, account numbers, all of that stuff should be included in your trading plan. So this is something that's going to evolve over time, and it's always going to be evolving because as things change, as markets change, as you change as a trader, your time frames may expand or decrease, or there's lots of things that are likely to change in your journey as a trader. So just remember, once you feel like your trading plan is done, it's never really done. So the particulars about your business, risk management, what size of account do you have? How much of that account are you going to risk before reassessing some of your trading plan and your trading strategies? Daily loss, overall loss, of course. And then we start to get into the kind of the daily nitty gritty of it, right? How are you going to bring consistency to the market? A lot of folks have asked me, Hoag, I want to be a consistent trader. How can I bring consistency out of the market? To which I respond, are you bringing consistency to the market? Set yourself up an outline of how you're going to do your homework every night, every morning, the tools you're going to be looking at, the different information that you're going to be collecting and kind of digesting to get to your trade ideas. The trading plan goes from your account numbers to how you're going to be looking for your hypotheses, what strategies you're going to attach to which hypotheses, and all the way till the end of the day. One of the things that I ask a lot of traders to do in their trading plan is, let's say you're up 10 grand today, and there's still plenty of day left, you feel like you can continue to stack onto that fat stack. Okay, what if things go wrong? What if things start heading the opposite direction? Well, how much of that profit are you going to ensure that you're going to walk away with today? You want to be a plus player, especially after a day like that. What percentage of that profit are you willing to risk? So, there's so much, and I know you guys have a lot to say about this, and it's all going to be really good, but your trading plan goes from the beginning to the end every day, every week, every month, and throughout your career. It's a never ending breathing document.
Yeah, we've compared it before to making a business plan for a small business or something like that. Just outlining what you would have to do if you were to go in front of someone to pitch yourself, your business as a trader. What would you want to know? And I think people like to go straight to the strategies, but the most important part is probably your capital usage, your risk, how much you're risking, what your past performances. Those are all things that you should know as you go into it. I'm going to send it over to Mick right now. Anything else in there besides strategies? And then would you include your strategies in your trading plan? Obviously, you would.
Yeah, thanks, Jack. Definitely going to include the strategies in the trading plan. But before you even formulate your trading plan, I think a trading plan's tough for some people because if you're new to trading, you might not have the experience with the trading, and it's hard to formulate a business plan around some business that you have little information on. I think first and foremost, whether you're new at trading or you've been trading for a while, when you're putting together a plan is, what is your goal with your trading? And, you guys, some people out there might say, well, Mick, you dummy, the goal is to make money. Well, okay, but really, how are you going to make money in the markets? When I started trading on my own account, my goal was to make a ton of money. It didn't happen, not right off the bat. And it never happened as much as I wanted. I got into trading. I was like, oh yeah, I'm 20 years old. By the time I'm 25, I'll be a millionaire. Really formulating what your goals are is very important. When you're getting off trading, goal, I think, should be more so the profits. Profits are a byproduct of good trades. So I think you should really be looking at, how can I be profitable with my trading? And when you get a small sample size of your trading, or a larger sample size, even better, start to break down some realities of what you could do. Is this something that I'm going to be doing part-time as a secondary source of income? Is this something that I want to be full-time? If not right off the bat, but eventually I want it to be that. What are the steps that I need to get that to be full-time? And really break down numbers too. If you want to be making, an extra 20 grand or 50 grand a year from your trading, plan out and plotting what you actually need to achieve on a weekly basis, I think is the most realistic thing in order how to get there. I don't think, everybody can say I need to average X amount a day per that, but we all know that we're going to have losing days strung out through our trading. So I've always liked looking at a trading week as kind of my performance. You want to have more money in your account than you did the previous week, because, there's a good chance you might have a losing day or two in there. Like John said it really, really well. These plans are living, breathing documents. So what you start with might not be where what you have months from now. However, with that being said, trading plans should change just like business plans should change. If your business landscape changes, you need to change with it. But where I've seen people go wrong with their trading plans is, and make a change to it or make an exception, is on an intraday thing. I have this trading plan or business plan for today or this week or this month. What you don't want to be doing is making adjustments to that intraday because you're finding yourself down money, or making a change because your account's in a different position than it was before. These should be well thought out things where maybe it's every month, or maybe it's every quarter, or maybe half a year. This is what I've been doing. You look back at your performance, then you look at your plan and say, where can I make some adjustments to my plan based off of how I've participated in the markets, how the market environment has been done, and look at it formally during different periods of time to see where you can make tweaks. Maybe you've made some observations that, hey, I'm doing this in 5-minute intervals, 15-minute intervals. I could be more successful if I go to a higher time frame. Well, you really need to sit down when you have a clear mind, while you're not trading, like not influenced by any trading activity in the day or in the week, maybe even in the month, and say, what kind of tweaks can I make to that I can leverage what I'm good at to find myself more profitable or more consistent with these trades, and then make those adjustments with a clear mind. That's what I really want traders who don't have a plan or do have kind of a vague plan to focus on. Going back, last thing I'll say is, when I started trading and I just thought I was going to make a ton of money right off the bat, I was really flailing. I was taking different kinds of trades, getting in for different reasons, getting out for different reasons, all over the place, just kind of throwing stuff at the wall, trying to make money. And I wasn't focusing so much on the process. It didn't take long to figure out that is a bad approach to my trading in general, from what I've seen with other people. So, my best advice would be really think it out. And, we want to be careful of doing what we want to be doing. And I've said this before, compared to doing what we should be doing. These plans are supposed to keep us in our swim line, keep us in line, be strict with ourselves, and we're going to get better results than when we get loosey-goosey and deviate from any plan or anything that we know we should be doing.
You mentioned a few crucial points there. The first being that a trading plan, once you develop it, is supposed to be long-term, maybe medium term, but it's not something you switch around. It's sort of like the charter or mission for your business. And second, the expectations game. I was the same as you, where I kind of went into the trading industry after college because I was like, if you're there 8-10 years, you should be making like $1 million a year. That's great money. Well, yeah, it's not like other jobs, right? You can't just work your way up seniority and get that. If you're around 10 years and you're a baller trader, you could do that, but it ain't easy and nothing's guaranteed. You can't be expecting to make more money the next year. You might improve, but nothing is certain. So work that in. I see far too many people who kind of do unrealistic math sometime of, if I make $500 a day, I'll make, close to 150K this year. Well, sure, if you average $500 a day, but no one's going to go out there and make $500 a day. That's difficult to do. And that's why it's a zero-sum game. Every trade you make in futures, somebody's making money on it, somebody's losing money on it. That's sort of the great truth of it. And those stats are just hard to beat, which is why you need a plan. Dan, to kick it to you, sorry to go last today.
We'll survive.
You were due for that. Yeah. Any other thoughts? And also, if you want to walk through maybe some of the things that are in your trading plan, because I know you're still kind of actively trading the oil.
Yeah, I mean, first and foremost, everything Mick and Hogue said here, and Jack, I do agree with all of it. For me, this is one of the areas I bring my military structure into my trading. It's very structured. It's very organized. It's very scheduled. Minute by minute, day by day. To me, I need to be in my simple routine. And that routine starts from the time I wake up to the time I am done with my post-trade analysis. So it's when I'm getting out of bed. It's, my expectations for showering, getting some food in me, a little coffee, my workout, walking the dog. All of that is really part of my plan. So I have it organized in pre-trade, my trade day, and my post-trade. And then on my side of it, I also have my risk requirements, or risk allotment, you could call it. I just call it risk. And that's based off of, my current cash position, my active open positions, and how much I'm willing to risk on any given day in any given trade. And that's all adjustable. So that's part of my plan, where I have a little flexibility of what kind of risk I have. And that comes with a couple caveats. what's the ATR doing? What are we looking at over the last 30 days in the ranges on these markets that we're trading? Because I can tell you for a fact, my risk, let's go 3 years ago today, was very different than my risk is here today. So those things have to change, and you have to be a little fluid with them, and recognizing. I think you really want to be fluid on when you tighten up, a little bit quicker to tighten than you are to loosen. So that'd be my one biggest key. So for me, my day starts. I need a 45 to an hour of prep, looking at the markets, defining the markets, cleaning up my charts, getting all the old crap off that means nothing, keeping the stuff that's really important, defining my levels. Where am I looking for my entry points, to include, my basic strategies. My biggest thing for trading, obviously, I do have a few, simple strategies, but I'm a levels trader. So I'm trying to define what I'm looking for at each level as that market approaches it, and what kind of execution will I need, or what kind of action will I need to execute at those levels. So try and get pretty detailed with it. But like Mick, when I first started, it was not this organized. I had one strategy. The first strategy I was ever taught was, a settlement play. And my dad taught me it, and that was his thing. And he did it for 30 years. And, that was one of his strategies. And that was my thing from the beginning. And I didn't really have a big plan around it. I was like, okay, if market's at a settlement price, look for an opportunity. That was all I had. And I had some big winners and I had some really big losers. And, at the end of the day, it did nothing because I didn't have my full plan around how do I protect my risk? How do I protect my profits? When am I getting out of these trades? It was truly, I had an entry point. I was looking for an entry. And then after that, it was flailing around looking for, okay, maybe this is let's get out. Okay. It's going to turn around. It's going to turn around. We're going to be fine. And I went through this whole process for a very long time until I really realized it was focus on the downside, protect your profits. And that all kind of falls into this plan. And my plan includes my post recap. Like, what did I do today? I can promise you that usually does not come when I'm done trading. It's going to be, I have a 24-hour rule.
Okay.
It doesn't necessarily work in trading, so I try and wait till the next day. So typically my morning includes a recap of yesterday's trading because my emotions have been taken out of it at that point. It's nice on a big day to look back that afternoon and go, man, good day. I liked it. But I'm not going to judge myself. I'm not going to grade how my performance was on that day. I'm waiting till the next day when I'm no longer biased and I can honestly be humble with myself. And I think that's where I want to round this whole topic up here. When it comes to a trade plan, have a little humility, be humble with yourself. No one else is judging you off your trade plan, only you. You can go out and tell your friends, the big swings you had and, the size that you're trading. But in reality, you have to be accountable to yourself. Hold yourself accountable. Have that humility in yourself and saying, you know what? Yesterday I was terrible. Maybe I made money, which I think is some of my worst days of my execution. I have positive wins, but I look at it and I go, I added too much risk that I shouldn't have had on. I sized up in a losing position to lower my price. That was a poor mistake, and that's going to bite me in the butt down the road. So be honest with yourself in planning.
Honest feedback to yourself is one of the hardest things you'll have to do. And it's so necessary to go back and break down trades, especially when you have a losing day. So I kind of like what you're saying there about giving yourself the flexibility to review before the next session. Because the last thing I'd want to do if I hit my puke limit or something like that is to sit around and be like, well, that sucked.
And it's easy. It's easy. Like on those days, you're like, the market was just against me. My plan was fine. Or, I made a ton of money. Everything was perfect. Give it an A+. But when you have a little time to sleep on it and the emotions now kind of taken away, it helps. And this is for me, and everyone's totally different, but it helps in a way of being honest with yourself. Like for me, I'm way more honest with myself after I've slept on things. I've given it a little time. And that comes from my mom. My mom always told us, when you're upset, you're emotional, give it 24 hours. And so my family, we all have a 24-hour rule. If you're upset about something, sleep on it for 24 hours. And if you feel the same way, okay, those emotions are justified.
Yeah, leave that email in the drafts folder before you send it.
Right.
Take some time.
Yeah.
The market's 100% brutally honest, right? I think that what you said there is, I see a lot of times when people discuss their trading behavior, especially on losing trades, they love to take their own agency out of it. You'll notice it switches from, on good trades, it's like I did this, and on the bad trades, it's like the market did this. Just something I've noticed, and I think that applies to a lot of endeavors, bad breaks. In any sport or activity, it's hard to be honest with yourself. Like, the market didn't do anything. The market did what it did, and you were
Yeah.
right or wrong.
Right.
I'm happy you brought that up. I mean, the more accountable you can be to your own decisions, because they are your decisions. The market's going to go up or down. It's going to go against us, but like, you have to take responsibility and accountability for all the results of your decision making. And if you can't do that, you're going to have a very hard time narrowing things down to, making the adjustments that you need to make. It's kind of a nice lead into one other little comment that I had that I wanted to share was, when I did first start creating trading plans, I had ideas of how I wanted to execute things, and I would do that, and it was all great. Over the years, my plan has been more so developed into what it is now, based off of things that didn't work. So it's, stay away from this, stay away from that, don't do this, those kind of things. And if I can see an opportunity in the market and I can, reference those things to, look at, and then everything fits, then I take the trade.
So just to kind of sum things up, we got capital management, where you're getting the money, how you're using it, into risk management, how much are you risking on each trade, what is your risk reward ratio, what strategies are you pursuing is the next part. And then also plans for your prep for the session, your trade management, and also your reflection on it. We say prep, trade, reflect here. Make that part of your plan, even if it is not fun from time to time, because the whole experience will be more fun if you do some planning ahead of time. Maybe I'll throw it over to Ho, because you've been silent for a little while here. I'm trying to think if there's anything else we want to cover before we throw in the towel.
No, I mean, there's been a lot of really good ideas, good thoughts about putting together a trading plan here today. Take that with you and remember how really important, and I think this is one of the most important things you guys have brought up, is how truly important it is to be honest with yourself about your behavior and to remain humble, because nobody's bigger than the markets. And it's difficult to remain humble, especially when things are going well. Just about every time I've sat back on my laurels and said, I've got this now, I got no problems, there's been danger knocking at the door. And the funny thing about humility is, if you say you have humility, you've lost it. Stick to that honesty, stick to staying humble, letting the market tell us what it's going to do, and profiting from it. You can do it. We all can. It's a matter of getting the right plan in order.
Speaking of the plan for this episode, Dan, do we have a quote to sum this up?
We do. It comes from Alexander Graham Bell.
I know him. He invented the frozen dinner, right?
Yeah, that's exactly it. Yeah. It's simple, but I like it. Before anything else, preparation is the key to success.
You distilled it all down to one sentence there. So prepare, and the results will be better. We promise. Okay. One of the few things we can promise in this is that it's better to think about things and not just completely shoot from your hip. That's a recipe for disaster. But don't dwell too much on those negative things, right? You're all going to do all right. So get a plan, have fun, manage your risk. We'll see you next week. Until then, bye.